Firstly, I would like to thank both Tally Global and GDT Accounting and Bookkeeping for doing this session with us on corporate tax. Um, we would I would like to just quickly share the agenda for the session with you today. So we will have a session on decoding corporate tax, which we will start off with, and after which we will take you through a quick glimpse of our latest and the biggest Tally release of Tally 3.0. And then we will be going through 10-15 minutes of Q&A. So if anybody has any questions through the session on corporate tax or on Tally or any other thing that you would like us to answer, please hold on to them or put them on chat. We will take them up during the Q&A session. Right, and please do stay on with us, because at the end I would like to announce a small thing for all the participants who are attending today. We will separately connect with you, and there will be a small offer for you guys for our services, so please do hang on. And yes, I would first like to welcome CA Ashna Malgaonkar, who is a partner at GDT Accounting and Bookkeeping. Ms. Ashna, welcome to this session, and thank you so much for agreeing to take this session up on corporate tax.
Thank you, Emmanuel.
Yeah, so ma'am, the stage is yours, and I would like you to take us all through and decode corporate tax for us, ma'am.
Sure. Is my screen visible?
Yes, ma'am, it's visible. Yes.
Okay. So good morning, everybody, and thank you, Tally, for this opportunity once again. If anybody has questions during the session as well, you'll are open to chat, put it in the chat box, so that at the end of the session we can run through the questions. The concept here today is not running through the entire law. During various sessions, what I found now is people are confused whether they are even taxable or not. So I would run through more on residency, not residence concepts, and then touch base on few other aspects and the latest developments here today. So first, UAE corporate tax came into effect. Announcement happened in January 22, and now June 23, it is already implemented in UAE for companies whose financial year has been falling after 1st of June. So if your financial year is June, then you are already under the purview of the corporate tax. Does anybody know here how many cabinet decisions, ministerial decisions has already been issued by the ministry? There are a lot of them already announced. We have made a small tab for you. If you see here, there are about 25 ministerial decisions issued. The first one is the federal law, and then there are about 25 ministerial decisions already come in, and an explanatory note and guide giving details on all these ministerial decisions as well. Sorry, not able to hear.
Ma'am, you carry on. I'll take care of this. Yeah.
Okay, fine. So there are about 25 decisions which are already released by the ministry, but we are expecting at least another 25 to 30 to come into the release. So what we will briefly cover today is who comes under the purview. If your company is based in mainland free zone, what happens? What are the deductions, reliefs that are available? And what are the steps that you have to follow now for corporate tax? So let me briefly explain to you what happens in the world around and how tax is charged on different concepts worldwide. One is residency-based tax. In residency-based tax, what happens is, if you are a resident of a particular country, if you are staying there, how will you understand if you are a resident or not? If you just have an Emirates ID or a resident visa of UAE, do you become resident here And if you are constantly staying back in India, say 6 months, just to keep your visa valid, you come for one day in UAE and you go back. Are you a resident in that case? You have to at least have 183 days in UAE to justify that you are a resident of UAE. So this concept of residency-based tax is there in countries like UK, Japan, Singapore, Australia. The second type of tax that is there in countries is citizenship-based. Citizenship is where the country gives you a citizenship and then they expect tax from you. The countries that use such system of citizenship-based tax is like US. So US has a citizenship-based tax. The other type is source-based. So when you are a resident, when you have a resident visa of UAE, but you stay most of the time outside UAE, then what happens to UAE? It is deprived of the revenue tax source base. So what did they come up with? They came up with another concept of taxation, was source-based taxation. Source-based taxation is when you're earning the revenue here, but even though you are not staying here, you're considered as non-resident for the purpose of taxation, but you earn revenue here. You have properties here, you have nexus of business here, then you have a state source of income in the UAE here. So that's why you are considered as resident for the UAE tax purposes here. Then comes worldwide concept. Worldwide concept is generally based on your residency. Suppose you are a company which is say in Singapore, but your entire management is sitting in now in UAE, taking all the decisions controls in UAE. Then what happens? Then you are ideally taxed on your worldwide income in UAE because your entire decision making, the point of effective management comes into UAE. So ideally, if you see, there are 4 concepts of taxes: residency-based tax, citizenship-based tax, source-based tax, and worldwide taxation. Now, what UAE has adapted among these is what we will scroll through all our slides for you to better understand. So first, to understand taxation, the most important thing is to understand what kind of revenue is being taxed here. So now let's go through who will be taxable as per the UAE law. There are 2 concepts in UAE. One is resident person and non-resident person. First, when you want to sit and analyze if you are taxable or not, you need to understand whether you are a resident person in the UAE law or you are a non-resident person in the UAE law, because the provisions are completely different for both of them. How will you understand if you are a resident person? A resident person is someone who is a juridical person. He has a license in UAE. License in UAE means a license taken from a free zone, license taken from a LLC, a mainland, any of these. If you have a company has a license in UAE, that means it is a resident in UAE. It can also be a branch of a foreign company. Second concept is non-resident person. What are non-resident person? Non-resident person, non-resident persons are those who are not resident in the UAE, but they have a permanent establishment in UAE, or they derive state-sourced income. There are 2 concepts when you can be taxable if you are a non-resident person. Either you have a permanent establishment in UAE. What does a permanent establishment mean? We will see later. If you have a permanent establishment in the UAE, or if you have some state-sourced income in the UAE, then you will come under the purview of non-resident person. Now, what is the taxability test for a non-resident? How would you know that because you are staying in US, Singapore, UK, how would you know which part of your income, and you have any connection with UAE, then how would you know what part of your UAE income will be taxable here? Permanent establishment has 2 concepts. If you have a fixed place of business, like if you have a branch, or if you have a warehouse in UAE where you are parking your goods and then distributing here, or if you have a nexus in UAE. What does a nexus mean? A nexus means an agent. Suppose you have an agent in UAE through which you are running your business, then you are called as a resident for UAE. So it is very important to understand what type of contact and what type of revenue you are earning in the UAE and through whom you are earning it. Suppose you have an agent in the UAE, that agent is fully dependent on you. You are the one taking the decisions for the agent. Agent is solely and independent on revenue. Entire revenue of that agent is coming only through your sources. Then you are considered to be having a permanent establishment in the UAE. There is another point which they have come up in the public clarification, that if you have a property in the UAE, a commercial property in the UAE, then also you will be considered as having a nexus in the UAE. So it's very important to understand and analyze every situation, what constitutes a permanent establishment for you in the UAE. Yeah, this is what I was talking to. In the public clarification in the cabinet decision 56, if a non-resident person who is in the state and is earning income from an immovable property, an entire immovable property through which you are earning this income, if it is owned by you, even if you are not a resident in UAE, you are considered to have revenue earnings in the UAE, and you will come under the corporate tax purview. So what constitutes and what type of a property is called an immovable property? It can be any land over which rights or interests are there or services can be associated with. It can be a building structure which is attached to a land, like a building. It can be any fixture, or even if it's not in the complete state of it, but it is a property through which you can relate that your earnings in the UAE is through that property, then you are considered a permanent resident here. Then this concept of freelancer, how does a freelancer or an individual, a natural person, for example, come under the corporate tax purview? If you are an individual earning any business or business activity related revenue related to business or business activity, and if you are earning less than $1 million during the 12 months of tax period, then you will not be coming under the corporate tax purview. But if you are earning any business revenue from business or business activity as an individual, which crosses the 1 million threshold, then you will come under the corporate tax purview. Let's take examples so you understand what is the concept here. Before that, I would want to go through this concept of what is called a business activity for an individual. There is nothing defined in the corporate tax law what is business activity. If me as an individual, if I am providing freelancer services to someone, is one company, suppose I'm only providing it to one company, does it come under the nature of business activity or not? At the same time, if I am providing it to 10 other companies, then will it come under the purview of business activity or not? Similarly, if you own a real estate property here, one property, from your salary savings, is it considered as rental revenue, is considered as business activity or not? Or if you earn from several, you have villas, you have buildings, you have, that will define as a business activity or not. For that, we have to refer to the federal law 50 of the commercial transaction law of UAE. This is the definition of business activity, wherein you'll find what is the actually business definition here, what constitutes business for UAE tax purposes. If you come under the definition of this and you are doing it for a commercial purpose, which is continuously doing it for a commercial purpose, then you will come under the definition of corporate tax in the UAE. If an individual is, as per Cabinet Decision 49, if an individual is only earning revenue from 3 sources, that is the wage, personal income tax, personal investment income, and real estate investment income, they do not come under the purview of the corporate tax. So you have to understand that if it is this nature of your income, purely this nature of your income, you are not liable for corporate tax, because there is no income tax, personal income tax in UAE yet. So this nature of income is not taxable in UAE. From when this applies to you, you have to first understand your financial year. Whatever is your financial year, from Jan to December, it is supposed, then your first corporate tax period will be Jan 24 to December 24, and your return filing will be 9 months after the end of the period. Now, most of the people ask me, when should I apply for my CT registration? CT registration is ideally to be applied even before your first corporate tax registration is to be done. There is no hurry as of now. Ministry has not come up with any dates for, has not come any particular date by which you have to do it. They are only saying that you have to do it just before your registration, and there is no penalty that they have issued as of now for non-registration. They have opened up registrations for the private and public joint stock companies. Tax groups have not been opened yet, but there is ample amount of time. First, need to understand, streamline your books. There is ample amount of time for registration. So ministry is lenient about it. What are the rates for corporate tax? By now, I think we all know this, but I'll just touch base a little. What are the rates? The rates for corporate taxes, the taxable income up to 375, you're not taxable. Up beyond that, if your net profits are beyond 375, then it's 9%. For qualifying free zone, you have to understand what is your qualifying income, and then calculate the 0 and 9%. For that, qualifying income calculation is completely different. So we have to arrive at the qualifying income and then classify it. Let's take some examples on the residency and non-residency concept and individual concept of taxation. As you can see on the screen, it's a freelancer, a woman freelancer, suppose. She gets revenue from company A, B, or say an individual or company C. What will be the taxability that it be charged? And suppose the income, aggregate income of this individual freelancer is more than 1.8, is about 1.8 million. Will that person be taxable here in UAE or not? She's a freelancer, she's a resident of UAE, but deriving income from 4 places, from 3 from companies, 1 from individual. Ideally, now she's providing business activity, and hence business activity that also above 1 million. So she comes under the corporate tax purview, and she will have to file a return and pay taxes. Now, this is another second concept of non-residents. She's a lady who derives income from US. Her business is in US, and she also has activity in UAE. So what happens here? She will be, she's a non-resident, not in UAE. She's getting income from UAE, she's getting income from US. So where should be taxable? She will be taxable only to the extent of the UAE sourced income here. Now, again, if this person has a property in UAE and getting only rental income from UAE, then rental income comes in, and she's done it from a personal savings. So a rental income in UAE does not constitute to be a activity, a business activity. It is because she's done it from a personal savings. So it will not come under the corporate tax purview. But at the same time, if she owns a commercial property for her business in UAE and she's getting certain income from that property, then it will be considered as a nexus in the UAE for corporate tax purposes, and it will be constituted as permanent establishment in the UAE. The next part of the session is free zones. Qualifying free zone. How would you define a qualifying free zone person? the decisions have come out, but ministry has not been very clear about it. The first session would be on 22nd of this month, wherein they are going to guide us exactly what will be the impact on free zones. As of now, they have said that each company should be contacting their individual free zones to understand if that free zone is coming under purview of corporate tax or not. So if your company is in DMCC, you have to ideally approach DMCC, maybe Shams, ADGM, all of these, Umal Queen, you have to contact these free zones and understand if you are eligible for applying for a qualifying free zone exemption or not. Ideally, the older free zone had certain decree. Many free zones, I can't say older, but most of the some of the free zones had a decree. Under the decree law, there was an exemption given for 50 years. So as per our interpretation, those free zones will continue to have this benefit, provided you have qualifying income. Most important. Now, how would you create, what is the meaning of qualifying free zone? If you have a company, say example, you have a company in Jabza, you have to see that you maintain adequate substance in the state. What is the meaning of adequate substance? This itself is a 1 or 2 hour session probably. Adequate substance is not something like just because you have a license, just because you have example, you have a warehouse in Jabza, you have a license in Jabza, but your entire staff strength sits in the mainland. Does that constitute a substance in the Jabza? Ideally, no, it won't create a substance in Jabza, because they have clearly mentioned that your substance should be in the free zone. If you are subletting or if you are conducting outsourcing it to third party, it should be within the free zone. So your place of effective management has to be from that particular free zone, not from outside of the boundaries of the free zone. Then in that case, you will break the decree law. So first you have to maintain adequate substance. Second is derive qualifying income from that. Third, you have to also have TP documentations in place. So transfer pricing policy has to be placed. If there are related party transactions within that free zone also, you have to have, or outside the worldwide, you have to have TP policies in place. That means all your transactions has to be at arm's length. So whatever transactions you do between the related parties should be at the arm's length. There are several formulas to calculate TP, but it has to be at arm's length. If you fail to meet any of these criteria, then you are not considered to be a qualifying free zone person. In that case, you will pay tax as 0% and 9%, up to 375,000, 0%. Then above that is 9%. So just to touch a little bit about substance. Most of the people here are confused as what is called maintaining adequate substance in the free zone. How would you avoid, what you should do and should avoid? Suppose you have a board meeting, to be considered that that board meeting is in UAE. What you should be doing? Your board meeting should be held in that free zone where it is, to be considered it in UAE. You should have a proper telephone line. There should be agendas and board resolutions passed. A stamp should be put on all the board meetings that has been done. Most of the important decisions or contracts which are done in UAE or outside, whatever related to that free zone, should be within that boundaries, and all the board members should be present there to maintain the quorum. So these are some of the things which you should keep in mind to see that you do not break the substance formula. If most of your directors are sitting in US and the decisions are done online, they will not be considered to be done in UAE. So you have to see that substance has to be maintained. Function wise also, most of the functions, the majority of the functions related to the company, the most important decision making functions will have to be done in the UAE. your accounts department, your marketing certain extent, if you have admin department, and the board members who are related to the company will be there in the free zone, qualifying free zone boundaries. Only then you can claim that your company is. This is a little about, this is very complex, actually cannot be run through in a nutshell. So this is the entire study of the free zone. Most important first step will be to understand which free zone you are in. Is your free zone coming under the corporate tax purview or not? Second part will be, are you deriving any qualifying income from the free zone? If you are arriving qualifying income, from what way are you arriving? Are you dealing with non-free zone persons? Then there are 4 sections which I have divided the income into: non-free zone person, free zone person, domestic or foreign PE. Domestic means if you have relations with mainland, and if you have an immovable property. So the entire law for free zones is broken down into 4 aspects. First part is the non-free zone person. If you are a non-free zone person, then you have to understand, are you deriving income from qualifying activity, or are you deriving income from non-qualifying activity, or it is from excluded activity? There is a list for excluded activity already given. If you have connections with free zone person, then again you have to understand whether you have excluded activity or non-excluded activity in your revenue. Then if you are a free zone person, but if you have a branch, or say if you have a warehouse in the mainland, then what happens to that particular revenue? That comes under 9%. If you have an immovable property, then again you have to classify whether it's commercial property or non-commercial property. For commercial property, again you have to understand whether your dealings are with free zone person or non-free zone person. For non-commercial property, it is straight away 9%. So first step would be not getting confused. First step would be to contact your free zone and understand whether you are coming for that qualification or not. If you are coming for the qualification, then second step would be whether you are within the boundaries of that free zone or not, to understand whether you are maintaining substance or not. Third step would be, your dealings are within the free zone, or there are other dealings, like are you generating revenue from mainland, overseas property through immovable property, that step, and then classifying it as excluded activity. And if it is excluded activity, then understanding the de minimis level. De minimis level calculation is not tough, but first these steps has to be followed to understand what is the concept of free zones. This is an example, a classic example. A company is in UAE free zone, but they are dealing, and they also have an head of associate company in the outside of UAE. But most of this relevant employees are in UAE. Board meetings and place of directors, tax residences are in UAE. Key decisions are taken in UAE. Accounting records are in UAE. But the overseas company, there are no assets, no employees, nothing. So what would happen in such cases? In such cases, the entire revenue will be taxed in UAE. Even though the company is fully established in, say, Bermuda, but this company is effectively managed in UAE. Let's touch base a little about small business relief. What are the small business relief? First of all, you need to understand the definition of what is small business. Any taxable person may elect, you have to elect, if you want to the small business relief, you have to calculate it and you have to elect it every year. So if it's for 1 year, you opt for small business relief, you will lose certain other benefits which are there in the law. Next year, you feel you don't want to opt for it, then you can not apply for this exemption. So that is given for 3 years consecutive for you, up to December 26. So first of all, derive at your turnover, the top level income, profit and loss account, turnover. Once you derive at your turnover, if the taxable person's turnover is less than 3 million for the tax period, for your first tax period, it is less than 3 million, then you can apply for a small business relief exemption. A constituent entity. Secondly, you have to also see that you are a standalone small business entity. You do not have 10 other businesses. So if you have 10 other separate businesses and together your turnover is not less than 3 million, fine. But if your turnover is above 3 million for several other businesses, then you will not get this exemption. Secondly, you should also not be a part of an M&E group. So it is very important to understand what structure you are a part of. If you are a single business unit, which is earning less, the turnover is less than 3 million, then you can apply for a small business relief. But understand, if you apply for a small business relief, there are certain reliefs that you will not be getting, like taxes for that, losses for that period will not be able to be carried forward. Then TP documentation you won't have to maintain, but losses, major losses is the thing which you won't be able to carry forward during the period you apply for exemption. Interest also you will not be able to carry forward. Whatever interest loss is there, you will not be able to carry forward. Yeah, this other points are which I've already explained, which is related to GAR. So if you're having already 5 businesses, which together say, suppose you have one business which is together making 5 million, and because of this provision, if you are splitting it between two businesses now, it will come under GAR provision, which means that you are accepting that you have artificially separated your business to take the benefit of small business relief, which is not right, and the government will not allow this. Even if they come to know later, probably there will be penalties as well. So you cannot artificially separate business unless there is a proper commercial reason for the same. So if your turnover says 5 million at the moment, and now you take 2 licenses and separate the business and bring it to less than 3 million to avail to this benefit, you will come under the anti-abuse rule provision. So please do not do this. What kind of accounting standards and methods have to be maintained, and what are the records that you need to maintain in your books? The first is financial statements should include statement of income. Statement of income is profit and loss account. Statement of other comprehensive income. What does that mean? Statement of other comprehensive income is the details of the income. Balance sheet is required, and equity and cash flow statement. Basically, a audit report. Yeah, an audit report consists of all this information. So it's important you have a profit and loss account, a balance sheet, a cash flow statement, an equity statement. Companies which opt for small business relief can maintain cash method of accounting, but we do not encourage this at all. Cash method of accounting is a concept where you book your revenue when you receive the money. When you pay, you book the expense. But this is not the right method of accounting for any firm. We should always have accrual method of accounting. IFRS is highly acceptable in UAE, so follow IFRS. Up to 50 million threshold, IFRS for SMEs can be followed, but structure your books of accounts. This is the right time to do it. Most of the companies have financial year Jan to December, so you still have 6 months of time to streamline this. And I'm sure Tally can be of great help to you in all this. Okay, so I made a chart for easy understanding. There are 4 sections. There are 3 sections here of persons. One is natural person. Second is the companies, that is licensed mainland or non-qualifying free zone person. And the last is qualifying free zone person. Based on the threshold, what happens? So if your revenue is up to 1 million, the first category, if your revenue is up to 1 million, if you are a natural person earning that revenue, you do not require to register. You are outside the corporate tax purview. But at the same time, if your company is earning less than 1 million, you will require registration, even though if your net profit and all is zero now, no net, it's fine, but you need a CT registration if you are a company. Same, if your turnover is up to 1.3 million, between 1 and 3 million, you can claim for the SME relief. For the SME relief, again, whether you are a natural person or a juridical person, registration will be required to claim the relief. This relief can be claimed up to 3 years. From ideally 3 years, from 24 to 26 something, 24, 25, 25, 26. From 23, it starts for 3 years. Then, if the turnover is from 3 to 50 million, what happens? If your revenue is, the turnover is up to 50 million, your registration is required and you have to pay taxes as per the calculation. That is 2 slabs. If you are a qualifying free zone person, you will have to arrive at the qualifying income and then calculate. If you are not coming under the qualifying free zone person, then you will have to calculate it at 0 or 9% regularly. Now, the next category is if your turnover is from 50 to 200 million, then what compliance adds to you? If you're coming between 50 to 200 million, audit is brought in to your compliance. So you have city registration, you have audit compulsory now, and you have to file the corporate tax also returns. At the same time, now if the slab goes above 200 million, what happens? If your slab goes above 200 million, you have to apply, you have to maintain TP documentation. But for TP documentation in the sense, master file, local file has to be maintained about 200 million turnover. But ideally for transactions even less than 200 million, you should maintain TP policies in the company. You may not maintain a master file, local file. You have to, you can maintain, ministry may not ask for it, but the right practice is you should maintain TP policies if you have related party transactions. What are the steps that the company should be taking now? What is this? What are the steps? Most of the companies ask us, what are the steps that we should take now? The first step would be review your structure. Review the licenses that you are having. I have seen a lot. We also do audits, accounting. We are not restricted only to accounting. We do structuring, company formations. We have seen companies here which have activity on license as one particular activity, but their revenue streams are several. So now it's time to regularize this. Kindly go through your license. Kindly go through what is the real activity that you all are doing. Major core income generating activity is what you need to focus on. And those activities should be there on the license. Review your structure. Tax grouping. For tax grouping, you have to have at least 95% common corporate shareholding. If you want to be a part of the tax group, you need to understand your structure, present structure. Second most important point is revise the chart of accounts. Align your chart of accounts. Tally also gives a certain chart of account. You can surely follow it. But again, you need to revise it a little bit depending on your revenue stream, depending on your expenses. Classify your chart of accounts. I have not seen companies having proper structured chart of accounts, which is very, very important. Financial statements have to be prepared. People don't do my yearly closing. I would prefer, we encourage companies to do quarterly closing as well. When VAT filing is done, ideally that's the time you should do a quarterly closing. Taxpayer has to maintain 7 years of record. Corporate tax filing will be 9 months after the period of the tax period is over. Any penalties will be levied, but they have not come up with the rate as of now. I just put a slide to show you how the corporate tax certificate will look. This is for one of our clients that we had done. So this is how the CT certificate will look. You will be given a corporate tax registration number. You will have your address there, the entity of the, what nature of license it is, and all the details will come. It looks quite similar to your VAT certificate as well, but this is the proper corporate tax registration certificate received from, you can see the law number mentioned there. So these are the details, but the most important part I want to say, whoever is applying for corporate tax registration, first step would be to streamline their VAT details, that is the trade license updates have happened or not, Ijari is been updated or not, all this will matter because they will ask you to do it before you get a city registration number. So update your VAT details as well on the portal, on MRR Tax portal. So with this, I would like to end the session. If there's anything, my contact number is here on the screen. You all can always get in touch with me. Abhimanyu?
Thank you so much. Thank you so much, Ashna ma'am, for enlightening us with quite a few things about corporate tax. I'm sure it will help everyone. I can see a few questions here. What I will do is there are just a couple of questions, ma'am, so I might as well just take it now. Are you okay with that?
Yeah.
So, ma'am, there's one question. Is the presentation slides going to be shared?
I can do that, no problem.
Yeah, we'll do that, no problem. Mr. Vishal Shah is asking, free zone to outside UAE will fall in non-free zone dealing? If yes, then we have to consider first part of flowchart.
Yes. Free zone to outside UAE will fall in the non-free zone dealing. There is a thin, there is a clarification awaiting there, whether, high sea sales will be considered or not. Ideally, if you maintain substance in the UAE, what are they saying is that goods has to come into the free zone, then the processing has to be done and distribution from the UAE. Designated zone word has been used. So I cannot comment just on this one line here, whether it will be in the, ideally the goods has to come in the designated zone, and from there they will have to go further. So we'll have to wait a little bit for that.
So thank you, ma'am. Mr. Vishal Shah is asking for services.
Services?
I think it's a follow-up to that question.
Yeah, I understand. Yeah, so for services, it won't be considered as outside the tax purview. It will be considered all taxable, is what our interpretation is as of now.
Okay. Alkesh the Chaturvedi is asking, I would like to ask the way how to calculate revenue.
Yeah, the calculation of revenue is as per the acceptable accounting standard, that is IFRS. So you have to follow IFRS for accounting booking of your revenue. You have to understand, suppose for construction, it is generally is on the basis of the completion method. Then for goods is on the basis of delivery. So revenue will be booked as per the accounting standards and IFRS.
Okay, so I still see a lot of questions. I will pause it for now, ma'am, for 10-15 minutes. I will let us finish the session and then we'll answer the remaining questions.
Okay, sure.
Yeah. Thank you so much, Ashna ma'am, once again for enlightening us with these information about corporate tax. I would like to now invite Mr. Anirudh Zala from Tally Global, who are Tally's authorized gold partners, to quickly take us through a bit of Tally release 3.0, which is one of our biggest releases launched 2 days back, and to help us understand how they will be able to help us through this times of corporate tax. So, Anirudh, could you quickly take us through that, please?
Sure. Let me just share my screen. Just confirm everyone is getting my screen or not.
Yeah, sure. We can see, I think, Shravan Tally, right?
Yeah.
Yeah. I can see the PPT
Okay.
now, not Tally.
Okay. Yeah, let me introduce myself. First of all, my name is Anirudh. I guess most of you knows me, but whoever don't know me, let me introduce. My name is Anirudh. I'm working for Tally Global Software. Tally Global Software is one of the gold partner and oldest partner in the UAE and all over the globe actually. We are present in multiple countries. As I seen you, we have head office in India and in other several African countries. We have branches like in Tanzania and Angola. Okay, we are having a 24-year experience in Tally domain only, exclusively. And we are providing services and support nearly 10,000 customers across the globe, and having international presence, as I told you already. We have highly skilled resources for providing this type of services and all. Okay. We are expert in training, support, integration, Tally customization, okay, multi-location implementation, government projects, secondary sales and stock visibility. And we have dedicated support desk to facilitate our customers. Okay. We are dealing in our products, which is surrounding the Tally only, which are like Tally Prime Server, Tally customization and add-ons, training and services related to Tally. We develop mobile application also, and we do integration also between third-party application and Tally. Okay, so that we are doing. We have few add-on library, which you can see here, some vertical solutions we have already developed. You can see, I'll not take all the names because it will take time. We have to finish it quickly. So you can go through these names and all. We have some industry specific solutions also. You can see here some barcode solution, POS management, school and college related and all, right? And we have some integration solution also, like third party application, where we can integrate in between the other software to Tally, mobile applications like Vensels and all, some browser based integration we can do, SMS solution, WhatsApp integration, auto email, that all we can do. This is the at a glance what Tally group is it. Okay. And let me take you through the Tally Prime 3.0, which it's came with a few benefits. One of that is Tally, it's coming with a new enhancement of new experience of a voucher numbering method. So maybe right now, if you are using Tally, you will face sometimes like some voucher numbering issue, where if you will pass a new transaction in backdated or let's suppose if you delete the old transactions or something, okay, your now voucher numbering will be changed. So now we have that option where it will retain from the current number only, and it will be continue. If you will pass the old backdated transactions, still it will take the whatever new number only, that only it will take. I'll take you to the Tally screen also, so I can showcase you in a better way. Just confirm, are you getting my screen or not? I guess you are not getting my screen. Let me just change it. Still not getting?
We can see your screen, Amrut.
You can see, right?
Yeah, we can see
Okay.
the Tally screen. Yes.
Okay. 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 So this is the Tally. I have created one demo company already, right? So now let me take you to the daybook. Okay. In daybook, you can see there are a couple of transactions. My last date of transaction is 4th August. Okay. So in daybook, I'll just open 4th August. And you can see the last, sorry, it's a 4 August. You can see the last transaction is 3773. Okay, so now in current, like in older versions, if I'll pass one more transaction for old dated, it will add one number which was that last date of that particular date, last number of that particular date, right? It will not take the next number, which should be like 733, sorry, 3774, right? But now in the latest version of Tally 3.0, we have that facility where we can retain that the continued number, and that configurations you can do from the voucher type. Okay, so I'll just showcase that also. You can see here, once you set that automatic number, you will get that option where you can set retain original voucher number. Okay, so let me pass one transaction for some old date. Okay, let me just pass one transaction for 1st August, right? So you can see the voucher number. Okay, it's still 3774. Okay, it's not taking the last number of 1st August. It's taking the latest number only. Okay, doesn't matter what date you are entering. Let me just enter the 30 July or whatever. Okay. Okay, still it is taking 3774 only. Okay. Like previously, it was the last date of the particular date only. One more example. Let me delete any transaction. Okay. Based on 4 August, let me just open. And there is one transaction. If I delete it, okay, you can see here still the number is not changed. Number is remaining same only, right? So this is the one enhancement we have done. So you can experience that. Out of that, a big update you can see here, we are getting the apply filter button here, right? So this is it's doing very easy your task. Like when you click on apply filter, you can just type whatever you want and Tally will filter for that content. Okay, let me just type, let's suppose we have some transactions here, and this is one transaction which is where like glass cup is included, right? You can see here, let me just filter with glass cup. Okay, I'll just type glass cup. Okay, and you can see the all the transactions where glass cup is involved, that will come automatically. Okay, and you can check like what information it is. Okay, even you can see the filtration detail also, where particular transaction and what is the exact content was there. So you can see the value was, the field was, stock item name. Same way, let's suppose if you type something, let's suppose Prakash. Okay. Okay, so wherever Prakash will be involved, that transactions will come. You can see we have Prakash in narration. Okay, so the thing is, wherever like whatever you will filter, that information will come. You don't need to, like previously also some options was there which was range and all, but in that case it was like little bit complicated, but now we have simplified. And the same filter option you will get everywhere. Let me just showcase the stock summary. Okay, this is the stock summary. Again, you can simply click on apply filter, just type glass. Okay, and you can see here all the glass related item will list out here, and not only from the name, even anything inside of the item. You can see here the glass was there in the description, so that item will also be listed over there. Okay, which will make you work very easy, and you can filter whatever you want. Okay, so this was the benefit. Apart from that, we have some couple of benefits, like we have introduced at time of Tally Prime. I'm sure if you have migrated, you are getting benefit of it. Like we have save view option. Okay, so you can make your own configurations, and then you can rename that report and you can bookmark in go to button. Again, go to button is one more the big update came with Tally Prime, where you can find for any report from anywhere. You do the multitasking, right? So these are the benefits. Okay, we will not be able to cover all the benefits in detail in this session. Actually, if you are interested in look in detail, uh, post this event close, we can again like connect you, and we can explain that in detail, right? So all of you, I request you, if you know if you want to know more about, you can please touch with me. Okay, you can connect with me and we can go for the we can like discuss more about that, right? Okay,
Okay.
the last, yeah,
Yes.
lastly, I'll just share my contact details. Like anyone, if you want to uh, contact me or one of my staff like Kiran and Vivek, they can, we have that contact details. You can get that, like you can be in touch with us. Okay. Thank you so much, Mr. Abhimanyu, for this session, and wonderful session by Ma'am Ashna ma'am. Actually, thank you so much for the presentation. Right. I'll just hand over if there anyone have any Q&A or related to corporate tax, they can ask and I will answer it.
Yes, Anuruddha. We'll just thank you so much, Anuruddha, for your session and for taking us through Tally Prime 3.0. I will just continue with the questions that we have left.
There's one question for Tally, I think, how to
Yes,
record.
ma'am. We'll take that also. Yes,
How?
we'll take that also. Okay, she says you can free zones company be. So Mr. Sushant asked, can free zone company and branch of it registered in mainland be registered under group tax?
Yeah, there is no harm in group tax registration, provided you are fulfilling all the criterias of group tax registration. That is, your branch is 100% under the mainland, right? So yes, there is no, you can club both of them.
Okay.
Not a-
Yeah. So the next question is, uh, Mamoon Trading is asking, what is the criteria for corporate tax payment if there is a single owner and the company income profit is not more than 360K per year? Then I think they sent it to me directly, ma'am. That's why you can't see
So,
it.
I can't see. That's what
Yeah,
is the
they
question?
sent it to me directly. It's what is the criteria for corporate tax payment?
Mhm.
And second is, if there is a single owner and the company income profit is not more than 360K per year, then what is the criteria?
No, then it doesn't come. It comes under the less than 1 million, right?
Correct.
360
Yes.
per K is less, yeah. So no, not required for registration.
Yes. Mr. Abrar is asking, managerial remuneration, is there any slots in corporate tax?
Yeah, so managerial remuneration is not given a cap as of now. But what they are saying is that you have to see that a manager is paid as per the normal UAE standards which are there with the other company. Just because he's a partner and a manager does not mean he should be overpaid. So for this purposes, now the question is, how would you justify his salary? You will ideally have to prepare his CV. You will ideally have to understand what role that he is playing. There are certain managers which I have seen here who do not are like silent partners, but yet they are drawing salaries. So that justification will be very important now when it comes to managerial salary. As of now, there is no cap. Like in public joint stock companies, there is a cap on the net profit you can take up to 10%. But here that cap is not come yet. But justification will be important as per what I understand it.
Okay, thank you, ma'am. Uh, Ashley Ranveer is asking, what are the key factors of setting up a business in a free zone in Dubai compared to the mainland, and how these factors impact the overall business environment and opportunities for international investors?
Yeah. So there are two things here. First of all, understand what activity you will be doing. See, the whole concept of mainland and free zone was mainland had 51% ownership earlier. Now, once the city came into picture, that law is taken out. So ideally, there is no much difference in a mainland company structure wise and a free zone company structure wise, because both of the law provisions now come under the same guidances. There is no local compulsory or 51% local shareholding is not anymore compulsory in the mainland. But again, there are certain free zone benefits, if you see in the law, which are only for those free zones which are coming under the decree law. So if you are looking for a business opportunity, you have to understand what kind of activity you will be doing. If you are going to sit in a free zone and deal with the mainland, then there is no much benefit that you will derive. Then you have to only weigh the cost benefit options for you. So it's easier for a mainland company which is having a small desk space or whatever to get a bank account. City wise, there is no much benefit if you are dealing with the mainland already. All your customers are in the mainland. For a free zone, there are certain extra compliances that you have to do. Bank account is a little bit tough. But only from corporate tax purview now, both the licenses are almost the same depending on your clientele, depending on your revenue.
Okay. Beju Kandan is asking, we are a related party company supplying our product to our sister company. How to deal with the rate and taxation? How the documentation is to be done?
Yeah, so this is all coming under transfer pricing. For transfer pricing, what we generally advise the client is, first of all, you need to understand what kind of products you are dealing. We do benchmarking for this. Under this, in benchmarking we have the global subscription. So we enter the product wise and understand what is the rate that is required for benchmarking, and then we design the policies for companies like this who have related party transactions. Right from services needs to be benchmarked to the goods price has to be benchmarked. And you have to have internal policies on record. So now the pricing will matter to which you are supplying to your related party, whether it is service related supply or goods related supply. Benchmarking will play a major role now, and the policies has to be maintained. So when you have books of accounts also, you have to have at the price that in this region, most of the time we have seen there is no invoices being made within intercompany also. But that will play a major role now, and you will have to do benchmarking for these services and maintain policy documents.
Okay, Maybelline Leva is asking, do you have next schedule for Zoom meeting? My colleague wants to join, but she's not available today. Maybelline, no worries. We'll share the recording with you, and we'll be hopefully doing many more sessions with Ms. Ashna and Anirudh in the future. So we'll definitely keep you posted. Yeah. Mr. Ibrahim Said is asking, is there any specific rules or methods to maintain documentation for corporate taxation?
There is no rules and method. There are only two things. One is prepare your books as per the international standards, IFRS standards. You prepare your books according to that. Second is for related party transactions. Benchmarking has 4-5 methods: cost plus, revenue base. So these methods has to be followed when you are doing your pricing strategy. Other than that, everything has to be done as per the accounting standards and audit. Ideally, get your books audited. Most of the people don't do it here. Close your books quarterly, but there is no method as such. Method is only after arriving at the net profit. As per the law, it is 0% or 9%. Up to 375, no tax, 0%. Above 375 is 9%.
Okay. Anirudh, the couple of questions for you. Could you please come on as well?
Sure.
Yeah. Yeah. So one question is, Mr. Bhanu Prakash is asking how to recall that deleted voucher.
Sure. I'll just share my screen and we'll showcase. Confirm you're getting my screen or not.
Yes, sure.
Okay, sir. So like once you pass a new transactions, then you will get this more detail. Okay. And once you click on more detail option, you will get this voucher number details, right? So this is the current voucher number. But once you click enter, you will get select unused transactions also, unused voucher number also, where you will get the list of the unused or which is deleted. And then you can select simply and then you can pass the transactions. Okay. So it will take like what was deleted actually. The current was 377 something, but this was the deleted, which I shown you the example. The same voucher number I can reuse and I can pass the transactions. I hope you are clear. Please just confirm.
Yeah, all good. Thank you, Anirudh.
Okay.
Mr. Abrar Ahmad Syed is asking, we are running different licenses in Dubai and Kuwait under the same name and 2 different VAT certificate. Can we register in corporate tax certificate?
Yeah, so what has happened is this issue many people will have now. If you have a group VAT certificate, does not mean you can form a tax group for city purposes also. For VAT purpose, what had happened was, even if you have a common manager or a common 1-2% shareholding, you could do a group TRN. But for tax purposes, that is not going to be allowed. So you will have to wait till the group tax tabs are opened from the Emara portal. As of now, if you want to group your tax group has to be one. For city purposes, that tab has not been opened. So you have to wait for your registration. Just because you have a group TRN certificate does not mean you are a group for city purpose. The laws are completely different for groups.
All right. Mr. Shubham Agarwal is asking, we have one company in designated free zone and another in mainland, and we have group tax. How will we calculate revenue for corporate tax registration and corporate tax payable? Separate for both, or will look for combined revenue of both FZC and mainland company?
We have a designated zone and another in the mainland. So I am assuming that these are individual companies that you have, one in designated free zone and one in the mainland. See, understand, for grouping, first of all, you have to have a structure in corporate tax purposes. So you have to have like a holding company, and that holding company has to be 95% shareholder at least in the other. So suppose you have a mainland as your holding company, that mainland at least should own 95% of that company which is in the designated free zone. Then you can form a tax group. So if suppose Ashna as a person has one company in designated free zone and one in the mainland, as an individual shareholders in both the company, I will not be able to form a tax group. So because I don't have a holding company created. So if yours is individual licenses separate, then you will have to create separate books, close the separate books, and then file the CT separately. Or if you want to form a tax group, you have to make them, one of them as holding company, and then make them 95% hold shareholder in the other company, form the tax group, and then make one return. But otherwise, it is different companies that you are having. But if your both companies are having turnover of say 1.5 million and one is having 2 million, together it is 3.5. So you cannot avoid registration. You will have to file taxes because that SME bracket you will break.
Right, ma'am. Mr. Abra Said is asking one more question. He's asking, we build up a new warehouse just to get rent benefit on production cost. Can we charge rent or book as expense for corporate tax?
We build up a new warehouse just to get rent benefit on product. Yeah, if you have built a new warehouse, it is your this, right? It's your asset or what? We have built a new warehouse just to get rent benefit on production cost. Can we charge rent or book as an expense? No, this has to be studied properly. What I understand is if you have our own facility and if you are charging it as deemed rent, and fine, because you are in your own facility, so you're not going outside as an office space. You are owning that, but it's an asset, but you are using that asset for this. So your depreciation and both will come into picture, is what I understand from this.
Right, ma'am. Anyway, sir, don't worry. See, guys, questions will keep flowing, but just wanted to let you all know that after this session, we will be connecting with each participant individually and trying to understand how we can help you, right? So if there is any questions that require more detail, please hold on to them. We will connect with you and get in touch with you, right? We'll take a couple of more questions, ma'am, and then we'll call it.
Okay, okay.
Yeah. Mr. Vivek Mehta is asking, we have main company in Abu Dhabi in free zone and branch is in mainland. So how will apply corporate tax in our company? Is there a specific process and specific point to be more focused?
No, again, this is free zone and mainland concept, whether it's in Abu Dhabi or Dubai. You have to first study whether you are maintaining substance in the free zone or not, because you are saying branch is in the mainland. So it's a free zone. So ideally, the entity in the free zone your branch of the mainland will be a part of the free zone main company in Abu Dhabi. So the branch will be a part of the free zone entity. And here you will have to understand that you have adequate substance in the free zone that you are maintaining. Now, whatever services you are providing, a branch is providing to you, or you are supporting the branch in the mainland, you have to see that all the transactions are at TP benchmark and at TP level.
Okay,
And
thank you.
registration.
Yes, just one more question. I think I missed Mr. Fazal Kareem. Okay, I think Anurudh has answered it, has he? Anurudh, have you answered Mr. Fazal Kareem's question? No.
Yes.
Yes, you have, right?
Yes. So as Tele by using that facility, we can get the whole log and history of that particular transactions, when it was entered, what changes have been done. So all the information you can find definitely.
Okay, thank you.
Hello.
Yeah.
Can you just mute? I guess.
Yeah.
Okay.
No, that's fine. Yeah.
Yeah. Okay. I guess Mr. Fahal got the answer.
Yeah.
Fahal sir, from the edit log, once you open the transactions, from transaction itself, you will get the log, and from log you can get all the information.
Yeah.
Yeah.
When can we have, Mr. Sushant asking, when can we have the latest Tally version? Mr. Sushant, we have recently launched the latest Tally version 3.0. I will tell Anirudh to contact you directly and help you migrate to the same. Yeah, we'll help you migrate, sir. We'll get you, we'll get connected to you. Right. So before we end the session, I just wanted to make one small announcement. Like I had said, we would be connecting with you individually to see how, number one, we can help you on the product side in terms of helping you with Tally and all the solutions that Tally Global can provide you. Also, we'll be connecting with you in terms of corporate tax, bookkeeping, accounting, and anything related to that, which Miss Ashna will be able to help you guys with, right? So also there are a couple of things which we will be offering as add-ons to all the participants as a gesture from our side when we connect with you. It might be related to Tally, or might be a small gift item, or might be something to do with your accounting and bookkeeping services that we provide. We will get back to you shortly on that. But yes, you can start expecting calls from us from today onwards, where we will individually speak to each person and we will help you resolve your questions also. And there will be some free add-ons which we will be giving to you as our participants from our side. So I would like to thank each and every person who has attended the session today, firstly. Secondly, I'd like to thank Ms. Ashna, who has taken out a valuable time and enlightened us on corporate tax. And I'd also like to thank our Tally Gold partners, Tally Global, Anirudh, Vivek, and Kiran, who have helped us organize this session and given us a small preview of 3.0 as well. Right. So thank you so much, everyone. Thank you so much, Anirudh. Thank you so much, Ms. Ashna, for attending this seminar with us. And yes, we will connect with all of you individually. So please do wait for our call.
Thank you. Thank you, everyone.
Thank you so much. Thank you. Thank you, ma'am.
Thank you, everyone.
Thank you.